Hello and welcome to this special broadcast. Well, it's that time of the year where we get an opportunity to look back at the year that was. And what better way to look at through the lens of the financial results? And to take us through that is the CEO of the Vodacom Group, Shameel Joosub. Thank you very much for joining us, Shameel. Economic conditions in South Africa continue to remain fragile. We've got credit downgrades, slow growth, but somehow you're managing to weather the storm.
Yes, we have, and I think what's been great is that our revenue has grown 3.9%. Our service revenue, which is directly related to our customer revenue, has grown 5.6% in what is, to be honest, a very tough economic backdrop. But I think what's been really successful for us is the culmination of the strategy of the investment that we've put into our network. We've invested over 26 billion over the last 3 years into our network, and we are starting to see the results, both last year and this year. So it has yielded the results that we were looking for, and it's been underpinned by a number of different things. I think one has been the strong growth in data revenue. 19.2% growth in data revenue, just over 20 billion rand now coming from data revenue. So very strong performance in that respect. But also the approach that we've taken. So we've invested heavily into our network on the one side, and the other side, we've segmented our customers, understanding and having a deep understanding of each of our customers, and then creating products and services that resonate better with with those particular customers. And I think also the part of then personalizing pricing, or private pricing as we like to call it, or simply put, just for you, has also been absolutely fantastic. And customers are really loving it, and the sophistication from the last time we've spoke to now has grown quite significantly. With the result that we sold 1.5 billion bundles this last year. To put into perspective, a few years ago, we were selling 50 million bundles a year. So you can see how enormously that has grown. And the more important part is that it's giving better value to customers. And you're seeing it, and it's resonating back into your NPS scores, where you've got a 17-point lead over your nearest competitor.
So those net promoter scores really underscoring the story that customers are loving what you're doing.
Very much so, and I think just taking that segmented approach, basically focusing on our service levels and so on, and it's also been under a backdrop of a big change in our IT systems. So there was pain during the year, but we've come through strongly. Our churn is at the lowest level that it's ever been. We're not losing customers to competitors. 5% churn is unbelievable. And in telco, if you can achieve that, I think that's that's really a fantastic result.
Just now you mentioned data revenue, and one of the challenges that you constantly have, of course, is on the one hand you have to invest billions in your network to maintain your advantage, and then on the other there's always this pressure for data prices to fall. How do you manage this delicate balance?
Well, I think, we've taken heed. I think, you obviously in the end, you've got to be able to provide returns so that you can continue to invest. So the way we've done it is to try and bring prices down, but try and offset it with growth and actual usage. So by expanding the network, making it faster, customers are using more, and then we're using that opportunity to basically reduce prices. So this last year, data pricing is reduced 16% again. That's 44% over the last 3 years. And we continue to do it. And what we're trying to do now is one of the big issues that we'll be dealing with in the next couple of months is the out-of-bundle rates. So we have a plan, the products have been created, and we're busy now in what we call the implementation phase. But as you can imagine, when you have to do it over a base of 37 million customers, you've got to do it phased, otherwise the impact is too big to try and do it all at once. But we are dealing with the out-of-bundle rate issue this year, and I think customers will be happy with what we've done.
All right, let's revisit the international story, and as expected, there's an area that's a bit challenging because there's changes to the regulation and customer registration requirements. What's the latest on that front?
So I think, from the customer registration part, I think the good news is that it's we finally managed to crack it and get ahead of it, and to be frank, avoid any fines and so on. So from that perspective, I think it's been great. So, you know, but going into the year, if you delete 4 million customers, you're then going to recover the customers through the year, which then doesn't give rise to a great year. And then you have the problem of the currencies. So one is the translation, just from last year's exchange rates into this year's exchange rates, where there's been a clear improvement in the rand. So that's the one trend that works to the negative. And then secondly, we have some underlying issues in terms of currency. In Mozambique, the currency is decreased by more than 65% due to the political issues and aid money being stopped by the IMF and the World Bank and so on into Mozambique. And that's put a lot of pressure on the economy. The company itself is growing really, really well, but when you translate it back into rands, you know, you get that negative effect coming through. And again, in the DRC as well, there was an you know, uncoupling of the dollar and the Congolese franc, with not a lot of dollars available. So that has also put pressure on the overall international performance.
All right, so another year behind us, another set of solid results, but I'm sure one is not thinking about resting on one's laurels. What would you say would be the group's main priorities for this current financial year?
Well, I think, you know, first and foremost is to continue with the momentum, continue to grow data growth across the footprint. In the international specifically, I think we need to monetize the data better. The traffic is growing, but there's a lot of pricing pressure and so on. And so we need to basically, let's say the revenue and the data traffic growth need to grow closer to each other in what we call the jaws. So that's the big focus area. Secondly, it's really the delivery of our JV in fiber, where we start to get going and basically, you know, make great progress towards our goal of covering 1 million households in 4 years. So that, I would say, is the second big priority. The next one is more around the digital services and products and so on. So delivering our TV platforms, making sure that we have clear products and services that speaks to the digital life of the customer. And I think that's going to become extremely important for us, but also growing our other acceleration units like our insurance business, our Internet of Things business. This year, our IoT network goes live. In fact, we brought our first live sites up a week ago. So, you know, a lot of that is now starting to come to fruition. But then also the investment into big data. So one of our clear advantages has been our Just For You product, and let's say that's the whole part of big data and machine learning, and that's been really, really brilliant for us. Firstly, we need to roll that out across all our countries, but in South Africa, we need to, let's say, up the ante and by making it even more sophisticated. So we're investing something like 250 million into it this year to give us that clear advantage. And then lastly, I would say the other big priority is making sure that we close the Safaricom transaction and that all the approvals and so on happen timeously. So a lot of work still to be done in the next 2 months, especially for myself in terms of road shows and these type of things, and having discussions with our different shareholders. And then the other part is that everything else has just got to continue working brilliantly. I call it almost hygiene, you know, the things that we do year in and year out, which is build great networks, provide good service, but also this year accelerate, let's say, our differentiation in customer services.
Okay, so solid year, onwards and upwards going forward. Is there a final message that you'd like to share with Vodacom staff today?
Yes, I think it's just to say thank you to all of you for the hard work, for the commitment, for the dedication. Vodacom is a great company because of you. It's because of the efforts, because of all the work and all the late nights and so on. So please also pass on my thanks to your partners, to your spouses, for allowing you to put in the hours that you do. Vodacom is only great because of its people. Thank you.
Shameel Joosub, thank you very much indeed, CEO of the Vodacom Group. And that's where we'll leave it. So, great set of results. And as Shameel was saying, largely because of the efforts that you've been putting in. So, well done to all of you. And that's where we'll leave it. Thanks.